So what should you do if you're looking to buy a home in this current market? Should you offer below asking price, go in at asking, or shoot for the moon and offer way over asking and waive all your contingencies? What do you do if you have a home to sell before you can buy? These are the questions I've been asked repeatedly over the last year and a half. So decided today to make a video to address these concerns that many buyers in this current market have. Hi, I'm Cameron Walker with Amanda Howard Sotheby's International Realty, and I've been in the real estate industry since 2014. Prior to that, I worked in mortgage since 2004. And I've never seen a market that was this skewed towards the seller. And I'm sure if you've been watching the news, listening to other people that have bought or sold homes over the last year, you've heard that too. And it can give you some hesitation about entering the market right now. So today we're going to talk about what's really the truth of the market, what's going on here in Huntsville that we're seeing on the streets as realtors to know, what homes are selling for, what offers look like. And we're talking about some strategies that you can employ to find your next home, to find the right home, to make the best offer without feeling like you got fleeced or just gave it all away. First, let's talk about the current housing market. What's going on out there? If you've watched the news, talked to friends or family, you've probably heard there's a nationwide housing shortage, right? And that does extend to Huntsville to a degree as well. What caused that? Back in 2011, the home builders really got burned. They built a lot of homes and didn't have enough buyers for them, so they cut way back on their production so they wouldn't get burned again. Then we had these macroeconomic shifts throughout the U.S. that really led to a lot more people coming to the housing market, and there wasn't nearly enough inventory for them. So think about like millennials coming into their own, hitting their prime home buying age. They really, make up a large chunk of the buyer population now. Seniors aging in place, no longer needing to sell the family home or downsize because their health's so much better and they have so much equity they can remodel if needed. Then you have the record low interest rates for people that may not have been able to enter the market before to find a home they desired. They just wouldn't have qualified for it. Now they do, and that's been going on for years. And then, of course, you have the pandemic where people who, their lives uprooted and changed. They're now homeschooling. They're working from home. They can work remotely. So they can move out of the city, move out of an apartment, move out of a smaller home because their needs have changed and they need a larger home, and they can live across country in a lower cost of living area. And then that brings us to taxes too. There's been huge changes in the tax code the last couple of years, and that's really incentivized people from higher cost of living areas to move to lower cost of living, lower property tax areas, and that's caused a big shift in the market too. So when you combine all these factors with the lower inventory from the builders, it's just really changed the dynamic. There's so much more demand than there is supply, and that's what's led to the shortage. So today we're going to talk about some strategies you can use to acquire a home without feeling like you're giving away the farm or compromising on your must-haves, and still get a home in a quick, timely fashion and be able to move in when you want. So what does it mean to be a buyer in today's market? I mentioned earlier, if you watch the news or talk to friends and family, there's an inventory shortage. And if you watch those shows, it feels like everything has to go over asking. Everything has to, waive all your contingencies. And that's just not the case. You have a lot more power in your offer than you really know that you do. And that's what I'm here to help you strategize and make the most appealing offer to a seller without feeling like you gave away the farm or compromised on those non-negotiables for you, those things you must have in your new home. So let's dive into some of those strategies. So first off is you need an agent that understands the local market. Not just myself. There's 3,000 or 4,000 agents here, but it is the 80-20 rule. 80% of agents do 20% of agents do 80% of the business, right? And there's a reason for that. We're go-getters. We're after it. We network well. We know the market. We know what kind of offers are coming in. So I help both buyers and sellers in this market, and that gives me a unique perspective. Not only do I get to write my offers and see what sellers are, how they're taking it, what feedback I get, but I receive offers from my sellers. So I see what other agents are using and doing, what kind of contingencies they're putting in place, what kind of negotiation strategies they're using. And I get to use that information to help my buyer clients on the other side as we're making offers. So some of the things I've seen are, you want to call the listing agent. You want your agent, me, as your buyer's agent, to call the listing agent and understand what the sellers want. Sometimes it is just the most money. But a lot of times it's a clean offer, the least amount of contingencies, a certain closing date, a rent back or a lease back. All of these things go into the offer, and all of them go into the seller's decision. And if they know you're being accommodating, that we had the forethought to reach out and find out what was important to them, that gives us a leg up over the competition on your offer without really having to change the terms too much, right? We're not talking about like offering 20% over the asking price or waiving every single contingency. We're talking about finding out what's important to them. So that's the first step, is you've got to call the listing agent, or your agent has to call the listing agent, get an understanding what the sellers want. From there, it's really, the next thing is price, right? When you sell something, you want to get the highest price, particularly with a home. So sometimes it is coming in over asking price, but how much over? You never want to feel like you got burned, right? So what I do is I run a comparative analysis on that house and that community. I look at recent sales and say, okay, recent sales have sold for X. This home's comparable, so that's where it should be priced. And sometimes I look at what's the difference between what the home's actually sold for versus the asking price. And we want to take into account the condition of the home, the location, any detracting factors. Is there something environmental? Is the lot smaller? Is the house lower square footage, less bedrooms or baths? Is it zoned for a different school district? And there's a variety of factors like that we're going to come up with to say, okay, this is the offer we should make based on what comparable homes have sold for and what they've sold for in comparison to their listing price. Did they sell above or below? And has this home been on the market for very long? The longer the home's on the market, the more likely the seller and the agent are to take a lower offer, right? So that's the first thing we're going to talk about is price. Second, we're going to look at what loan program you're on, or if you're offering cash. Cash is always king. There's just the lowest amount of contingencies with that, and it makes the sellers feel the most secure. But next we're going to look and say, okay, are you a conventional loan? Are you a VA loan, FHA, USDA, some other program? Because sellers feel more comfortable with a conventional loan. Right, wrong, or indifferent. I've bought homes on FHA myself. I've helped a lot of FHA and VA qualified buyers. And sometimes they're way more qualified than my conventional buyers. But that attitude is out there in the market, is that conventional is king after cash, right? So we need to look at what type of financing you have and how we can make that most presentable to the seller. Just understand, if you're using VA, FHA, or USDA, or some other type of financing other than conventional, we may have to make a few offers. We may have to, think outside the box on offers to make it more palatable to the seller, because they do have so much control in this market. Now, hey, if you're the only offer on a home, which still happens, there are homes that get 20 offers and there's homes that get one. It doesn't really matter what type of financing you have, right? If you're the only offer and you're in the ballpark of what the seller will accept, you should get accepted. So there's some strategies to find homes that don't have as many offers as well. So, all right, after sales price, after loan type, the third thing is going to be escrow period. And that's really your closing date, but also those things inside escrow, like home inspections, appraisals. What are timelines on those? And so if a seller's looking to close in the next 30 days, they want to have a high degree of confidence that the home is going to close very quickly, because they're making plans. They're buying another home. They're moving out of the area. They've got to hire a moving truck and turn off utilities. So they want to know very quickly that this home is going to close. So they want you to have your home inspection quickly, have any requests for repairs if there are any quickly, and have that appraisal done quickly, and or know that you can cover a gap in the appraisal. If they price that home at the peak of the market and there's not a lot of comps to support it, well, then that house may appraise for a little bit less. And that's something you need to know going in, and that's something we do part of our analysis. But that seller may feel more comfortable if you offer a $5,000 or $10,000 appraisal gap. I'm not necessarily suggesting you do that. What I'm saying is, if you want to win a bid and make that seller feel comfortable and give up some things in some other areas, this is a viable strategy. But those are the things that make them feel comfortable about accepting an offer, is knowing when they're going to close and having a firm commitment towards that closing, knowing that you're moving in that direction. All right, the fourth thing we're going to talk about is earnest money deposit. I always suggest at least 1% earnest money if you feel very comfortable about this house. If we're making an offer on a home, we've walked through it, you feel comfortable about the condition, the location, and barring anything really out of the blue that is really going to knock this offer out and make you not want this home, then I suggest making a 1% earnest money deposit. Yes, you can put any amount, and I've even seen people make offers with no earnest money. Those offers don't get accepted, but you can make them. But in any event, a 1% earnest money deposit shows that you're serious, you're committed, and that you have the funds to do this. Also, showing proof of funds with a pre-approval letter. We talk about your type of financing, whether it's cash or whether it's a mortgage. But think about this too. You've got to offer either a pre-approval letter or a proof of funds when you make an offer. If you offer both, if you are financing, but you're putting a substantial amount of money down, you may want to flex where that cash is coming from, right? If it's already in the bank or in your investments, or even if you're selling another property and it's going to be from those proceeds, you want to show the seller that you actually have them. Because I'm going to be very blunt. I've been in situations where, and seen other agents in situations where everything's going smoothly till we get close to closing, and then you find out that the buyer actually didn't have enough funds to go to closing. Either the closing costs were higher than they anticipated, they bought their rate down to qualify and they didn't have enough cash to do so, they needed to pay off a debt, or they took on a new debt during that 30-day escrow period, right? So not that it happens that frequently. Most lenders are pretty good about those pre-qualifications and making sure the funds are available. But there's a new loan officer that hits the market every day, and he's going to make that mistake, So if you can flex and show that you've got the cash to back up what your offer is, be it for an appraisal gap, be it for a large down payment, what have you, that's really going to show the sellers that you're serious. And you can do this. You don't necessarily have to show a bank statement, although that's probably the most common way. You could get your banker to just write you a letter, say, hey, Joe Schmo has X $100,000 in the bank that he can put towards this purchase. It's liquid. And if you don't have somebody who can do that for you, a statement will suffice. And then, like I said, if you're selling your home, just the closing documents from that showing your net proceeds would be all we would need. So, all right, so we've got the type of financing you have, the offer price, the escrow period, the amount of earnest money, the flex there on showing that you have the funds necessary for closing. After that, it's really house by house specific, community by community, seller by seller. And that's really reaching out. So the challenge sellers are having right now, right, is moving on to their next home. So they need to sell this home to move on to the next one, and nobody's allowing contingent contracts right now, or very few sellers are accepting those. Occasionally a builder will take one, but that's really been it that I've noticed. So, all right, they need to be able to move forward quickly, or maybe they're building a home, or they're going to need to go out and shop for a home, and they need a lease back period. And this is something I've done quite frequently. I've probably done 5 or 6, maybe 7 the last year that were accepted, and we did. I wrote a lot more offers with them than that. This is where you close on the home and you let the seller rent back from you for a period. Sometimes I've done it as short as 2 or 3 days, and I've done it as long as 2 months. So really what that does is allows the seller to have time to either move out or close on their next property. There's some caveats to it, and it's situation specific. So we'd want to talk about it on a case-by-case basis and make sure that when we write that lease back, there's some penalties for the seller if they don't adhere to it, so that you don't get burned as the buyer. We can have them leave funds in escrow at closing that they get back, after a period of time, or they perform something in the contract of the lease. But we can strategize that on a house-by-house basis. But this goes back to calling that listing agent, finding out what's important to the seller. Sometimes the seller doesn't want to close and lease back. They want a delayed settlement. They want to wait 2 to 3 months on settlement, but they want to be under contract while they do that. Give them that level of comfort. This has been great for a lot of people that are moving to the area. They might be on a 30 to 90 day relocation package, and they need to go ahead and find a home, but they don't want to start paying for it right out of the gate. They may have a home to sell where they're at. So this is something I run into fairly frequently too. And then there's so many other things that could be important to a seller. Some agents like to write a buyer's letter. I'm okay with that. I'm not a huge fan of it, to be honest. I'm okay with it, but I do want you to be careful of some language that we write in there. So if that's something you're interested in doing, we can absolutely do it and submit it to the seller. And I've seen it work, and I've had it work on my sellers, where another agent submitted one on behalf of their buyers. And my agents took that offer in part because of the letter and how they knew the home would be used, for future generations. So I'm not against those, but there's some caveats that need to be in there. There's a lot of fair housing laws, and you could inadvertently write something in there that trips up the fair housing law. So we just need to be careful in how we construct that letter and what information we put in it and what we exclude. All right, so this is just some ways that we can improve your offer, make it stand out in a multi-offer situation, and pretty much assume going in, every offer you make is going to be a multiple offer situation. Right now, I'm waiting to hear back from a seller. We've made an offer 3 days before the home even went active. It was in a coming soon status, and that agent already had 3 other sight unseen offers, right? So they went active yesterday. They were going through the weekend, and we'll find out tomorrow whether or not we got it or somebody else did. So also, don't assume somebody's going to counteroffer you. This agent was asking for best and final up front. They're not going back to anybody. So you do want to put your best foot forward on any offer you make. And I understand that can, really cause some heartburn, right? Because you feel like you might be taken advantage of or make too strong of an offer. And there's ways to mitigate that risk too. Escalation clauses, asking for copies of other offers, if somebody does ask us to push up. But we want to put our best foot forward with our offers so that we make sure we get you in the perfect home. And we do so quickly without having to make 20 or 30 offers, whatever you're seeing online that people are having to do. So if you have any questions about the market, drop them in the comments below. My contact information is always down there too. You're welcome to give me a call, shoot me an email, send me a text, or follow one of the links. She'll take you to my website where you can register. I'll reach out to you directly, and we can talk about your home search and how to put together the perfect offer. Again, thanks for watching. My name's Cameron Walker.